Welcome back. You're still tuned into Trading Hour. For the market, it's currently around a 90-point cut that we are seeing on the Nifty. It is a mid-cap index, which is seeing pretty much as much of a cut right now, around around 0.5% lower there as well. The Nifty Bank is faring just a shade better, but that's what's going on in the equity markets. Let's talk about the world of commodities now. Manisha joins us. Manisha, what are you tracking today?
Pavitra, Nifty commodities may be down, Nifty metals may be down. Non-ferrous metals are also trading weaker, but the ferrous metals, you have to keep an eye on that because iron ore and steel prices still trading in the positive. Iron ore actually is trading at around 3-month highs of $108 to $110 per ton there. November has been the first monthly gain in 7 months that we have seen. And in last 1 month itself, 28% of gains is how the iron ore prices have been trading. This is a report card on what iron ore has done. We've seen a year's high at $171 per ton. Low for this year has been at 76, and all-time high was in last year at $224 a ton. From those kind of levels, at these current levels of 108, we are half of what last year's high was and half of what this year high has been. So it has been under pressure that we've seen in case of the iron ore prices. Well, there have been various reasons that have been putting pressure on prices, but majorly it is about China, which accounts for 2/3 of all seaborne demand for iron ore that we see in the global markets there. And the decline really started after China said that the housing is for living and not for speculation. And we have seen that reaction come in as a chain reaction on real estate projects, infrastructure and housing as well. This is what the Chinese numbers are between Jan to October in this year. So as you can see, whether it is about national home sales, property investment or new construction, everything has seen a decline in this year as compared to the previous year. Also, when you look at the global markets there, this is a report from World Steel Association where China and European Union have seen a decline in demand in this year. And collectively, when you look at the global demand, that also has seen a contraction of around 2.3%. For the global markets, this is what the expectation is that for the next year as well, you would perhaps just see a 1% growth in the markets there. So not a very appreciative or very strong bullish view coming in there. This is the production numbers where we have seen production continue to decline in China and European Union. India only has been a bright spot there with nearly 6.4% of a strength when it comes to steel production in this year. The markets are anticipating the iron ore prices to be quite jittery going forward. Much will depend upon what the Chinese COVID restrictions continue to be, the US Fed policy where the markets are yet again trying to create a balance. And then China is looking to replace old steel capacity with electric arc furnace, suggesting that Chinese imports and Chinese production of iron ore perhaps have peaked out already. Expectation about the next year also is quite divided. ING, for one, believes that next year could be a range between $85 to $95 per ton in case of iron ore. S&P Global is slightly more bullish. They're expecting an average of $105 per ton for iron ore in next year.
Okay, thanks a lot for that, Manisha. Staying with the commodity space, let's get you some opinion.